Welcome back to the channel, and thank you for joining me today. This video is not entertainment, it's not hype. This is a deep dive strategic briefing for serious crypto investors, the individuals, who want to understand where the next trillion-dollar opportunities will emerge. Over the next hour, we're going to explore the 5 most powerful narratives shaping the future of digital assets. These aren't theories. These are narratives backed by institutional investment, venture capital flows, developer activity, on-chain data, macroeconomic signals, and shifting global regulation. If you stay until the end, you'll walk away with a clear understanding of where the big money is moving, which sectors will outperform the market, how to position your portfolio intelligently, and which mistakes most retail investors make before a major rally. So sit back, relax, and let's begin. Let us begin with the most dominant narrative of this decade, the convergence of artificial intelligence and blockchain technology. AI is not a trend. It is the most transformative economic force since the invention of the internet. But here's the problem. AI on its own has weaknesses, and blockchain solves them. First, let's talk about data integrity. AI models are only as good as the data they're trained on. How do you verify that data hasn't been tampered with? How do you trace its origin? Blockchain provides verifiable, tamper-proof data pipelines, creating a foundation of trust that centralized systems simply cannot match. Then there's the issue of decentralized compute. The world is running out of GPUs. NVIDIA can't keep up with the insatiable demand for processing power. This creates a massive bottleneck. Decentralized GPU networks powered by crypto create a new global computing market without central points of failure. They allow anyone, anywhere, to contribute and monetize their idle computing power. And finally, tokenized incentives. AI agents will need their own form of money. They'll need rewards, smart contract execution, and automated payments to function in the digital economy. This is where crypto becomes absolutely essential. Imagine autonomous AI agents that can execute trades, manage on-chain portfolios, run entire businesses, hire freelancers, pay for their own compute power, and even vote in DAOs. This is not science fiction. It's happening right now, and the infrastructure is being built as we speak. So how do we break down this massive AI and crypto narrative for investment? I see 4 key categories. First, decentralized compute networks. These are the projects providing the raw GPU power to AI models worldwide. This is the picks on shovels play, and institutions are already investing heavily here. Second, AI agents with on-chain wallets. These are the autonomous programs capable of making real economic decisions on the blockchain. Third, AI trading systems. Think of predictive models powered by machine learning designed to outperform human traders. And fourth, AI data marketplaces. These are secure, tokenized environments where data can be bought and sold legally, transparently, and with full user consent. The investment angle here is crucial. Smart investors don't chase shiny new AI tokens with no utility. They chase infrastructure, they chase utility, and they chase scaling potential. You're not just investing in a coin, you're investing in the digital backbone of the next economy. But while AI steals the headlines, the next narrative is quietly attracting global banks, hedge funds, and governments. Now we turn to what may become the largest migration of capital in human history. RWRO World Asset Tokenization. Think of everything in the traditional financial system. Government bonds, treasury bills, real estate, carbon credits, corporate debt, private equity, gold, commodities, invoices, insurance products. All of these, representing hundreds of trillions of dollars in value, are now being moved onto blockchain rails. This means they are being represented as digital tokens. Why is this gaining so much momentum right now? 3 main reasons. First, regulatory clarity. Unlike many areas of crypto, governments and regulators love RWAs because they're tied to real, verifiable assets. They understand them. Second, institutional onboarding. Major global banks are not just experimenting. They are actively using blockchains to issue bonds and other financial instruments. This is no longer a test. It's a strategic shift. And third, the efficiency gains are undeniable. Traditional finance often operates on a T+2 or even T+3 settlement delay. Blockchain reduces this to seconds. it also creates 24/7 liquid markets. Liquid assets like private equity and real estate can suddenly become tradable anytime, anywhere, increasing their value and accessibility. From an investment perspective, we are still incredibly early. The entire RWA market cap is a tiny fraction of the trillions locked in traditional finance. This is like buying land just outside a city that you know is about to expand tenfold. Investors who position themselves inside the infrastructure layer of RWAs, the platforms, the oracles, the identity solutions, could benefit from a multi-year tectonic shift in global finance. And while RWAs bring legitimacy, our next narrative brings raw energy, culture, and most importantly, attention. Meme coins may seem unserious, but they are cultural assets, and in the digital age, culture drives liquidity. Dismissing them is a mistake many serious investors make. Why do they thrive? First, mass participation. Anyone can join. There are no complex barriers to entry, no white papers to decipher. It's simple, it's viral, and it's community-driven. Second, narrative speed. Memes move at the speed of the internet, far faster than institutions or traditional media can keep up. And third, a simple truth that most investors underestimate. Attention equals money. Where the eyeballs go, the capital follows. But the meme coin landscape is evolving. 2025 and 2026 will introduce a new class of meme coins. We'll see AI-generated memes, celebrity-powered projects, and coins with a strong, community-driven purpose beyond just speculation. We'll see tokens with low, fully diluted valuations, which offer more upside. Some will even integrate real utility or become cross-chain enabled, living on multiple blockchains at once. So what's the smart investor perspective here? You don't bet your net worth on memes. That's gambling. Instead, you allocate a small, asymmetric moonbag. This is the type of investment where a tiny, controlled amount of capital has the potential to drastically move your entire portfolio's performance. It's a high-risk, high-reward play, and it deserves a small but deliberate place in a diversified strategy. But beyond the pure force of culture, the next narrative brings us entertainment, new revenue models, and the potential for true mass adoption. Blockchain gaming is coming back, but this time, it's completely different. Let's be honest about what went wrong in 2021. The first wave of crypto gaming was plagued with problems, unsustainable tokenomics that relied on constant new money, a complete lack of fun gameplay, Ponzi-like reward structures, and a distinct absence of experienced game studios. Play to earn quickly became play to exit. So what's changed now? Everything. First, AAA studios are entering the space. We're talking about real game developers with real budgets, creating genuinely fun and engaging experiences. Second, we have sustainable token models. Game tokens are now being designed for utility within the game's economy, not as inflationary reward machines. Think of them as in-game currency with real-world value. Third, mobile gaming integration. This is critical. It opens the door to billions of potential users who already have a smartphone. And finally, institutional interest in digital assets is growing. Game skins, virtual land, and character accessories can all be tokenized as NFTs, creating a true player-owned economy. The smart investor angle for gaming is to see it as a long-tail growth sector. This is the Trojan horse that brings the next 100 million users into the crypto ecosystem, often without them even realizing they're using a blockchain. And now, we arrive at the crown jewel. What I believe is the most important and potentially explosive narrative of them all. Bitcoin is transforming from just digital gold into a programmable financial layer. Bitcoin Layer 2 revolution is here. For years, Bitcoin's main drawback was its limited functionality. You could hold it and send it, but you couldn't build complex applications on it. That is changing fast.
So why will Bitcoin Layer 2 South explode?
First, Bitcoin has the strongest brand, the deepest liquidity, and the most secure network in all of crypto. Developers are now building entire ecosystems on top of this foundation. Second, the introduction of ordinals and BERC20 tokens brought a new wave of culture and activity to Bitcoin, proving there was immense demand for more than just a store of value. And now, new Layer 2 networks are bringing full smart contract capability to Bitcoin, allowing for DeFi, NFTs, and more, all secured by the Bitcoin network. The institutional angle is profound. Institutions already trust Bitcoin. It's the one crypto asset they are comfortable holding. Now, imagine an entire DeFi economy, ending, borrowing, trading built directly on top of the most secure blockchain on Earth. Let's conclude with a simple, intelligent strategy for navigating these narratives in your portfolio. A balanced portfolio might look something like this. For your low-risk allocation, you focus on the established leaders, Bitcoin and Ethereum. Alongside the leading AI infrastructure projects and major RWA platforms, these are the blue chips of the new digital economy. For your medium-risk allocation, you can look towards promising Bitcoin Layer 2 projects, mid-cap AI, compute tokens, and the infrastructure powering Web3 gaming. These have higher growth potential, but also carry more risk. And finally, for your high-risk allocation, and this should be a small part of your portfolio, you can place your asymmetric bets. This is where meme coins, microcap AI experiments, unlaunched projects, and new Layer 1 or Layer 2 ecosystems fit in. Above all, your psychological strategy is key. Don't chase green candles. Take profits incrementally on the way up. Use these narratives to guide your decisions, not emotions. Focus on the underlying trends, not just individual tokens. If you've made it this far, you're already ahead of 99% of the market. It's these 5 narratives: AI and crypto, real-world assets, meme culture, Web3 gaming, and the Bitcoin L2 revolution will shape the next crypto cycle. Smart investors prepare before the rest of the world catches on. If you found value in this deep dive, subscribe for more premium crypto insights, and comment below which narrative you want a full dedicated episode about. Thank you for watching, and as always, stay disciplined, stay curious, and stay early.